Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show. On this episode of Tech Guys Who Invest, we are excited to have Juan Vargas on the show. Juan is a successful syndicator who is focused on building generational wealth for his family through multifamily real estate investing. Juan shares some deep insights into what this means and some great ways to identify what is important to you so that you can use it to motivate you to build wealth. Juan has a successful podcast that has had some very well-known people on the show, like Robert Kiyosaki, which you can find at thejuanvargas.com. You can also find out more about Juan and his company at genwealthcapital.com. And you can reach out to Juan directly at juan@genwealthcapital.com. We'll also put all of this in the show notes for you for your reference. Let's welcome Juan Vargas to the Tech Guys Who Invest.
Juan, thank you so much for being a guest on the Tech Guys Who Invest podcast. We are confident and excited that you're going to add tremendous value to our listeners.
Hey guys, I really do appreciate it, and it's going to be exciting. I feel honored to be on your show and see if I can hopefully add some value to your audience as well.
All right, we're really looking forward to it. And we're going to jump right in with this first question. On your website, it talks about generational wealth through real estate, which Adam and I absolutely love. That's where our minds are at. So what's an example of creating generational wealth through real estate?
Yeah. No, I love it. A great question. For us, I mean, so I guess I'll come back up real quick is, wealth, the way I define wealth and you'll see like, my entity name is Gen Wealth. Gen Wealth Capital Group is my entity name, but wealth is not all about the monetary side. It includes it, but it's not all that. It's health, it's family, it's time, it's all those combinations. Religion, your spiritual values, all those things. But we use real estate as a way to help us achieve those, help us be more in line, with those specific categories. We like multifamily, we like commercial real estate, multifamily properties, because that's, that definitely helps you to be able to obtain that, and that's what we go, that's our go-to asset class.
And who doesn't really?
Yeah. Who doesn't? I mean, I think, if you don't know about it, then yeah, it's okay because you don't know about it. But I mean, once you start to understand it, it just makes too much sense,
Yeah.
And then from that point you gotta just do what you can to get to that point, right? But it really is one of those like, oh, this is a no-brainer, so that's why this is where I'm at, and this is what I'll be focusing on for several years to come. Yeah,
That's awesome. I was joking around there because I'm focused on multifamily as well. Love it. I like live and breathe it right now, as Kevin could tell you, right? But
yeah.
I love a lot of the things you said, and wouldn't mind unpacking some of that, especially the parts about wealth not just being about money. That's really cool. Kevin and I are right there with you on that. A lot of people don't necessarily equate some of the other things you mentioned with it until someone starts to really help them unpack it. So I guess, what are some other ways you think about a wealthy life? You mentioned a couple there. Could you maybe expand on some of that?
Yeah. So, definitely, I mean, a reason why a lot of us, get into, real estate, for example, is because we want that financial freedom, right? So,
Right.
that's another form of wealth. When you're getting cash flow and your cash flow is higher than what your expenses were, then you can say that you're financially free, right? Quote unquote, financially free. And so that's one of the great benefits of real estate, commercial real estate, and specifically here is that it allows you to be able to attain, that, financial freedom. And then, from financial freedom, what do you get from that? You get more time. And what do you get time for? You get more time to spend it with your family. You get more time to be more, be healthy, be more healthy, to eat healthy, and all that. It's all kind of packed together, but you have to do something to be able to kind of unpack it. And then, like that allows you to open that door and get into and have like the whole prize and package, so to speak. That's, I think, financial freedom, family, your religious values and beliefs, all those are very, very important. And they're important to different people in different ways. But yeah, I think, those are some of the biggest ones, for sure.
It's good stuff.
I love it. That balance, that's huge, that I don't think a lot of people recognize. First of all, that's part of wealth, but also that's the end goal, really, to have that freedom to do all of those things.
It really is. I mean, we talk about commercial real estate as being a wealth builder, all the time. But there's a bunch of other things. I mean, you guys, are obviously tech guys. I mean, there's a lot of money in tech. If you know exactly what you're doing and you know what to do, you can make a ton of money. And so, I mean, there's so many different asset classes to be able to get you to that point. But what are you doing it for? You're not going to take it home with you. Whenever you die, it's gonna stay here behind. It's in other words, is borrowed, and is borrowed for your borrowed time. Borrow money for your borrowed time is what it is. So what is your ultimate goal? And you got to find out what that why is. And everybody has a different why. For me, it's family, for sure. I have 3 boys and married, but family time, those are some of the highest ones. But yeah, that's the way it is.
Yeah, Juan, when I hear generational wealth, it automatically makes me think about wanting to be able to pass down and pass on wealth and ensure that that your children and your family can have something more. And so that's what kind of comes to mind for me. Or is that along the lines of what you're thinking about when you say generation?
Yes, exactly. So, so we were talking about wealth, and then now when we talk about generational wealth, that's when you can definitely pass that down. So what you have been able to build, the lifestyle that you have been able to create, then it's something that you can pass down to your family, your kids, your boys, or your whatever, and then they can kind of pick up where you left off, and then continue the business or whatever, or that lifestyle, right? So still with that time. That freedom, those kind of things. So that's exactly what you said, generational wealth, and that's the exact meaning in my eyes.
Okay, yeah, I thought so. And being a dad, also one of the things that I really like to pass down, in addition to my plans to pass wealth on, is education. And really give them a head start, because I didn't grow up that way. That it wasn't passed along to me. In fact, I was pretty financially ignorant until just a few years ago. And what I want to do is not just pass down the wealth and some of these ideals and values, which are much more important to me, but also the knowledge and the ability for them to be able to generate even more wealth than I ever will.
Yeah, dude, that is a very, very good point. And, that's why a lot of these guys that are super wealthy, out there, right? So I'm not going to, name any specific names, but there's a lot of guys that I see, and not just because I read articles or whatever. They specifically say that they're not going to give anything to their kids. It's like, dude, what do you mean you're not going to give anything to your kids? Like you have like so much, but you're not going to give it to them. And it's because they don't want them to be spoiled. They want them to be responsible. They want them to earn it, and not just feel like it's owed to them, and part of that is being financially educated, right? Because if you're not financially educated, you can have all the money in the world and you still have a chance to lose it all because you're just not there. So you have to make financially educated decisions, throughout your life, as a child, in that situation, and make them great decisions as well. So that's a very good point. You have to want to pass that down, and because it's not easy, and I mean, right. Especially in the country, we're a capitalist country, so you gotta try to do what you can, on that.
Absolutely. And speaking of your family, we can definitely tell that you're a family man. You mentioned them as part of your why. For other investors, how can you recommend, or what advice would you give them on them trying to figure out what that why is?
Yeah, man. So that's a very good question. Man, you guys are asking good questions. That's a very good question, man. So I would say that, find out what it is that when you close your eyes, and this may sound kind of silly, but when you close your eyes at night, you're thinking, what is it that what's your purpose? You're gonna get up the next day for what? Everybody can get up to go to work, and everybody can get up to go do this or go do that, but what is the ultimate reason? And if you have a family, usually not all the times, because there's some crazy people out there that wouldn't put their family in, but usually that's going to be your family at the top of the list, right? You want to live a certain lifestyle, then that's another item to add to the list. But really think about what's the most important piece to you. If you could take everything away, what is the one thing that you could not live without? What is the one thing that you or people that you could not live without? And that's usually that's your why.
Wow, I've never heard it broken down that simply in that question. But when you think about that, what is the one thing you can't live without? I think that's huge. And thanks for sharing that. That's a really good tip.
Yeah, I love that. That's cool. And I love how you said, close your eyes and think about it. And that's awesome. And visualization, such a powerful technique. I know a lot of wealthy people use that to not only clarify and determine things like what's their why, but also to help themselves achieve what they want to achieve. What is your what? How does that look for you, so that if you can see yourself getting there, you'll be able to get there? Do you use anything like visualization? And I guess to just tack onto that, do you have a morning routine that you like to use?
We're talking about this in closing our eyes, and we're talking about visualization, but honestly, I don't have anything specific that I go on like off of on a daily basis. Pretty much on my morning routine, and it shifts every time. It's a little different, but it depends if I'm traveling or if I'm not traveling, because that'll definitely change things. But if I'm at home, then get up, sometimes I go to the gym. If I don't go to the gym in the morning, then I'll go at night. But I try to make sure that I get my gym time in as much as possible. And that's one thing that I can't go without, right? And so the other thing that I like to do in the mornings, sometimes I'll do it at night, but like I prefer to do it in the mornings is read, because for me, and I've read this many places over several times, but I just tend to also be able to focus and retain more information early in the morning when I'm reading, or something like that. So I don't do a lot of visualization, but I do, have prayers and say, hey, thank you, God, for allowing me to live another day. Let's go out there and crush it. Those kind of things. And
Awesome.
and so those kind of things. Just be thankful for what you have and where you're at. But and then from there, it's time to get to work. So just try to tackle the most the most feared task that I have for the day, or one of the ones that's like, man, like I gotta take care of that, but I'm not looking forward to it. Just knock it out. Be the first one they knock out, and then it makes your day much more productive. At least for me, that's what I try to do. Just get that.
I love that. What's the one tactic or the one task that you fear? I like the way you phrase that, because you're right. It's the most important, but I recognize that it's, for whatever reason, it may scare you and you don't want to do it, even though it's the most important one.
Yeah. I mean, it's one of those things, like if you keep like procrastinating and you keep like doing everything else but that, guess what? At the end of the day, it's still going to be there. And then if you don't do that day, then the next day is still going to be there. So why not just knock it out, get it out the way? And then you're like, you feel so much much more free, and then you feel much more relieved, and you're more productive. And it's the same thing as going to the gym in the mornings. You go to the gym in the morning and you're like crushing all this weight and you're doing all this and that. And then you shower and you're like, man, I feel good. Like your body feels good and you're just like ready to crush the day, So it's the same kind of situation, just knock it out and get it out the way, and you'll see you'll be way more productive and feel much better.
Oh, that's great. Yeah, I like that a lot. So Juan, tell us about what you're focusing on right now. Are you focusing on multifamily apartments, or what are you focusing on right now?
Yeah. So we do multifamily apartments, commercial. So we're not, when we say commercial is 5 units or higher, although we don't do anything like necessarily less than 100. So we try to focus on projects that are 150 units and higher. I'm based out of Texas, in Houston, Texas. So we try to look for properties, acquisitions within Houston, DFW, San Antonio. Recently we acquired a property. Actually, this past Friday, we acquired a property in Phoenix, Arizona, and that's another strong market that we like. But so these are multifamily properties. 150 units and higher is kind of what our range is.
Congrats on that Arizona deal, by the way.
Oh, thank you. Yeah.
And speaking of the multifamily, what are you looking for in a market? And I know that's like a secret sauce type of question, but just an overall 30,000 foot view. Hey, this is something that we look for. This indicates this would be a good place for multifamily.
Yeah, that's a very good question. So one of the first things we look for is it a landlord friendly state? I like New York. I've been there several times. I think the people are awesome there. It's just not a state where I would want to go and buy properties in, because guess what? The laws are not written in favor of the landlord. They're more written in favor of the tenant. Same thing in California. California's a beautiful state, but the laws just don't help us out, right? So I like to look for states that have those landlord-friendly laws. And then from there, okay, so what do we have there? Now let's look for a business-friendly state, right? Is it business-friendly? Do we see jobs coming in? Because if you have jobs coming in, then what does that do? That creates, people to come in. That creates a population growth. Job growth equals a population growth, which equals a demand growth, and which equals a rent growth. Kind of like that, right?
Mm-hmm.
Not in a situation, but in most cases, right? So definitely job growth, population growth, those type of things. What's going on in that market, and also we look for historicals, try to see what happened, in the prior recession, and then try to analyze it and underwrite it that way and see if it works out, and just being conservative on that. So that's a long question to your quick answer, or your a long answer to your quick question.
Oh, that's good. Good. A lot of good stuff in there. Actually, several things I wouldn't mind unpacking. One of them, for our listeners who may not be immersed in this right now, can you explain just fairly quickly, high level, what landlord friendly means? When you say landlord friendly, what does that mean?
Good question. So, like for example, in California, a lot of the tenants, they can be on your property even if you file for an eviction. Then they can still be on your property, 6 months, 9 months, a year from now, right? Wow. And it's not necessarily that you're not doing your job. It's just that the laws are not in favor of the landlord. So they can stay on the property until it's like everything's finalized. And I don't know all their rules and regulations. So I won't go necessarily into all, like more specific detail, but they are allowed to be on your property much longer than, say, for example, Texas, which, is a state where, hey, if you haven't paid your rent, then, okay, we're filing an eviction. You got 30 days. 30 days, then if you're not out, then, hey, guess what? We're calling the sheriff. The sheriff is coming in to get you out. That's kind of the situations that we look for, because if they're not paying, then how can the property's not going to perform, right? So you have to make sure that the property performs, and you got to make sure that your tenants are also doing their part by paying their rent.
Yeah, that's a big consideration. I could see where that would take a big hit to the income.
For sure. And then there's also some other regulations, such as late fees. There's some states that allow you only to charge a certain amount of late fees. And then there's other states that allow you to charge more. And then all it does is it pushes the tenants to want to pay their rent, right? Catch up to it, because otherwise they're gonna keep getting charged the late fees. And so, but there's other states that say, no, you're only going to charge this very little, and that's it. So that doesn't motivate the tenant to want to pay, and it actually incentivizes them to stay, longer without paying, because they're not going to get penalized any further.
Absolutely.
Yeah. So those are kind of things that I would say that's kind of define, high level view, what a landlord friendly estate is versus one that's not.
Gotcha.
And of course, I guess it's worth noting that if you had questions about that and you were looking to invest in a particular estate, going to a lawyer is probably one of the best resources, a real estate lawyer who deals with that, right?
Yeah, a lawyer could definitely help you out, and they'll be able to guide you. And a lot of this information is out there, on Google. Do a Google search and find out, you can search, landlord friendly estates. And then even from there, you can even, research and find out, which one of those landlord friendly estates are like the ideal one for you to want to invest in, but that's how we're able to make these deals work, is from the income that they're providing, otherwise there's no business there,
Absolutely.
Yeah. On the other flip side, that it's okay to collect some late fees, because that can go towards your other income source, So it's not necessarily a bad thing, but you just don't want those non-paying tenants at all, where they're paying nothing at all to be on your property.
Fantastic. That's a good point. And when you talk about the markets, you mentioned Phoenix and Dallas. Are you referring to those main primary markets, or do you ever invest in the tertiary markets around that? How do you approach those types of markets as well?
Good question. So we try to stick with, primary markets. We don't necessarily look at the tertiary markets. So a couple of different things there. So primary markets, we like them. The downside is, like, if you're looking at right now, you're going to pay a higher price, right? Because it's a primary market, right? Everybody wants to look at the primary markets. But then on the flip side of that, whenever you're going to exit, there's going to be a buyer. Everybody knows where Houston's at. Houston is an international city. Everybody knows where Los Angeles is at. Not saying I would invest in Los Angeles, but those are international cities, right?
Right.
So you're always going to have not only local capital, not only national capital, but also international capital that would be looking in those cities to invest in, right? So that's why we look for these primary markets, compared to a tertiary market. Like I'm going to use Texas for example. So if you're looking at a Nacogdoches, Texas, which is like in the middle of somewhere over here in the middle of nowhere, then most people don't know where that's at. And so when you go to sell, this also going to be a problem, because you also don't have the same job growth, the same economic drivers that you do like in the primary market, so so there's a lot of different indicators there, a lot of different factors, but that's why we try to stick with the primary markets.
Yeah, it's great. So Juan, a lot of people who listen to our show work day jobs. They like their jobs, but they have an interest in investing in real estate. What are some ways those people might be able to invest in bigger deals like the ones you're doing?
Yeah. So, for people that are busy professionals and they're still, have their day jobs and, and are not going to be planning to leave anytime soon. I think multifamily investing is a good way for them to get involved into a real estate. They can do it passively, right? So, we have several passive investors that like invest, like I'm just saying, using ours as an example, that invest in our deals. And it's because, they're busy professionals, doctors, attorneys, nurses, you name it, engineers, and they're busy and they're making, a good living. And they're not going to go from one day, being an engineer to the next day being a full-time real estate investor. It's just, not going to happen. So they like to invest, and it allows them the opportunity to make a return. And you get some tax benefits there, and it's just a win-win for them, all around. But I think passively investing for a lot of the people that are working full time is a great strategy, a great way for them to get into real estate.
I love that. So they can basically, it's the abundance mentality where you invest almost passively into that and learn along the way as well.
Yeah. So legally they will be limited partners. So they'll be partners in the deal. So they'll be limited partners, and you never know. Maybe 5-10 years down the road, they have interest in doing their own deal. But it gives them like a behind the scenes type of viewpoint, to where they can see how the operator is looking at the deal, what they're doing month to month, why they're making certain decisions. How they're increasing the other income and the collections, and what they're doing to reduce expenses. Just a lot of different things, because they will see it and maybe not be hands-on, but they'll be able to see it and read the reports, and you see a repetition of a repetition, it kind of sticks, right? So maybe 5, 10 years down the road, whenever they are ready to exit out of their job or leave their job, they have some experience and some knowledge, and they might want to do their own deal or bring in some of their friends or partners or whatever. So I think it's an excellent way for them to get involved.
I love it.
Yeah.
And on your show, or on your show, your podcast, you have a ton of awesome guests. Like I saw Robert Kiyosaki is one of them.
Wow.
And speaking of, well, maybe, hey, if you can get us in with Robert Kiyosaki, that'd be awesome. We'd love to have him on the show.
Yeah.
But my question was, what have been some of your favorite tips on building wealth that you've learned from your fantastic guests?
Yeah, man, that's another great question. I mean, I would say that, one thing that I found with all these guests that I've had, no matter what their profile level is or whatever, there's some guys that are starting out, and there's some guys that are, you have the Robert Kiyosaki or Grant Cardone, those type of guys that I've had on the show. Is one thing that's common to all of these guys is they all take action. They all take action. Is there fear? Yes, of course there's going to be fear in something new that you do or something new that you're looking at. So you can analyze it and you can look at it and then you can do your homework and research. But if you don't take action, it doesn't matter. You looked at it for nothing. You got to be willing to take action. And of course, things can not go wrong or can go wrong sometimes. Not everything's going to go right. But, one thing's for certain is that you're not going to make any progress if you don't take action, and so you have to be willing to take those educated action items and move in that right direction, so that's one thing for sure, is that they all have to take action. They all have some type of mentor, and mentor, I could say it could be from their father, from their uncle, grandfather, whatever, to paid mentors or coaches, somewhere along the line. They all have had that, and they all have surrounded themselves with some highly intelligent people. They try not to be like the smartest guy, in the room, so to speak. So they always try to have their team, smarter than them. And so those are some of the common things that I see, come up, time after time again. So yeah, I would say those some of them. For sure.
That is fantastic. I think you just gave our audience some real nuggets there. I love some of the things you just said. So thanks for that. And this kind of, we're in the learning track here right now. So I want to shift gears a little, but stay with the learning theme and ask you about how you teach your kids and some things you're teaching them right now as they're growing.
Yeah. So for my kids, I make them read. I make them read first of all, I make them read regular books, but I also make them read like some of the financial books that I've learned. So some of the common ones are like Rich Dad Poor Dad, like Cash Flow Quadrant, those kind of books.
Nice.
And just some of those. Those are those are not real estate specific. They're more like mindset specific. And the Cash Flow Quadrant is a good book because it talks about different quadrants that people are in. You can be an employee. You can be self-employed or a small business. You can be a big business owner, or you can be an investor, right? So which side do you want to be on, the B and the I, or the E and the S? And so it kind of shifts your thinking a little bit, and you're like, hey, I want to be on the B and the I, which is the business owner and the investor, because one, you get to build your own business, so you get pride of ownership right there. But you also, tax wise, it's huge, right? So when people think about business, they always think about the income. It's always income, and taxes is very little. And I'm not a CPA. I'm not claiming to be a CPA at all. But taxes is something that gets dismissed or doesn't get talked about enough, right? And if you think about it, taxes is your biggest expense that everybody has. And this is something that I teach my kids, so that's why I'm saying it, is the biggest expense that you have and that you're going to have when you become an adult. But yeah, it's something that we don't talk about. And the same thing as sports. I love sports. I'm a big sports guy, but what's one thing that they always say in sports? Defense wins championships. Everybody always talks about income. but nobody talks about their taxes, and what's the point of making all this income if you're giving it half away to the IRS or whatever, right? So, real estate allows us to reduce those taxes dramatically, especially commercial real estate. And so, that's one way that I tell them, and I tell other people as well, not just my kids, learn that, the financial intelligence, is something that doesn't go away. It sticks with you, right? You drill it in hard enough, like I am. I got to make sure that it doesn't go away, so.
Absolutely. Start young. Yeah, I agree.
Good stuff.
Yeah. So, teach them as much as you can, and hopefully they can learn from you, and things that you didn't get to learn, when you were a child, and things that you wish was around when you're a child, and just give it to them. Hopefully they're much more better for it, because of it.
Well, yeah. Absolutely. Now, speaking of learning, I Adam and I are educators, so we love just picking people's brains about resources and things of that nature. You mentioned a few of the resources that you use for your kids. What are resources that you recommend when someone says, hey, how do I learn about financial education, or how do I learn about multifamily investing? What are books or podcasts or people that you recommend them researching?
Yeah. So like for me, I got my start, if we're talking about real estate, in general, a lot of my early days, actually digging into the learning stages, was going through like sites like Bigger Pockets, right? So there's a biggerpockets.com. People can go there and they have a ton of information from I don't know, laundry facilities to storage, units, multifamily to, retail to whatever, anything and everything, that's related to real estate. You can find information like that. So I started going to the sites like that and just listen to different podcasts, books. Books are very, very important for you to continue that education. Never stop learning. Always keep pushing on that. So, there's a lot of different sources that they can definitely pick up, for that. So I don't know if you'd like for me to get more specific, but there's definitely a lot of sources out there.
Excellent. So Juan, we're acutely aware of the market cycle and feels like we're near the top. A correction is coming. No one knows when, but what are some things you are doing to prepare for that? Maybe the way you're looking at things now, is it a little different because of that? And if you can just share a little bit of that with us.
Yeah. Great question. So yeah, you are right. We don't know what inning we're in right now, right? So we could be in the ninth, in the top of the ninth, the bottom of the ninth, or we could be in extra innings. We don't know, right? So one thing that we try to do is we try to, like for our deals, we try to go for the long-term debt, right? So that means that, the term or the loan won't be due for 10 years, 12 years, something like that, right? So what does that do for us? How does that reduce the risk? Well, as opposed to getting like a 3-year term, because there's some 3-year terms if you go in like a bridge lender or something.
Mm-hmm.
Some of the debt funds, you can go 3 years, 5 years, and they're a lot shorter. So what happens in 3 years or 5 years, when those 3 years or 5 years comes up and the capital markets dries up, what do you do then? You have to either refi, but you can't because the capital markets dried up, or you have to sell, but you can't because how are they going to get financing? So those are some of the things that we look at, for, that's why we look at the longer term debt, 10 year, 12 year, something like that. Right. And we look for fixed rates. The other thing that we do is, we try to be truly conservative. There's a lot of people that say that they're conservative, but you look at their underwriting and it's not really conservative. What we try to do is look at the historicals, going back to 2009, 2010. How was it then? How was economic vacancy then? And let's underwrite it to those numbers now. Okay, let's see how it looks now. What about the rent growth during that period? How was the rent growth? I'm not going to be accounting for 3% if the rent growth was only 1% or 0.5%.
Right.
We still don't account for 3% anyway. Like for example, our Phoenix market, they're getting like 7-8% rent growth, and we in our deal that we did 2%. So we still are
wow,
being very conservative there.
Nice.
But also the cap rates. A cap rates is a big indicator of your returns. It's gonna really have a lot to do with your returns. It's gonna really affect it, right? So the lower the cap rate, the higher your returns that you're projecting. So we always look at the historical again. We look at the historicals. How was it then? What was the worst it got then? And then if we underwrite for that. If it still makes sense, even if we accounted for all these different things, then it's a deal. We're moving forward with it, assuming the physical characteristics and the market are good. We're going to move forward with it. But you cannot be too aggressive, and you have to make sure that you check those boxes and being conservative there.
Nice.
I love it. Well, Juan, we wouldn't be tech guys if we didn't ask you a question about tech. So we want to know what piece of technology is your favorite at the moment that's doing the most for your business?
For sure, I would say without a doubt is we keep it simple. We use Google Drive. So G Drive, that's where we share files. That's everything goes there. Like I use it pretty much like every single day. But I also use Dropbox. Dropbox is very important, for us to use, and we have a lot of our files as well. But I've used Slack. Slack is another good one for communication. I think that's awesome. And as I said, we're simple, so we also use just a regular calendar, like a Gmail, Google Calendar, and it works out great for us. So. We don't use much more than that, but it works out great for us, So
fantastic. Keep it simple.
Yeah, absolutely.
For sure. Mm-hmm.
That's awesome. Well, Juan, it has been really great having you on the show. I mean, I think you've given our listeners some fantastic value. So we want to thank you again for coming on the show. And if you can let us know where people can find you.
Yeah. Thank you so much for having me on. I really do appreciate it. Somebody wants to get in contact with me or send me an email or anything like that, then they can reach me at Juan@genwealthcapital.com. That is Juan@genwealthcapital.com. And they can reach out to me through that or the website, genwealthcapital.com, or even social media. I'm all over social media, so they can reach out to me there too.
Awesome. And we'll put that in the show notes.
Yeah. Thank you. Okay.
Thanks, Juan. Thank you so much for your time.
Hey, thank you guys. It was a pleasure. Had a lot of fun. Look forward to listening to the podcast as well.
Excellent.
That's it for this episode of Tech Guys Who Invest. This is Adam.
And this is Kevin. Thank you so much for listening to us. Don't forget to join our Facebook page where we're building a community of investors so that we can share ideas, tips, and other ways to help us get out of the rat race. If you found value in this podcast, it would mean the world to us if you could share it with your network. Lastly, we love feedback. It's how we get better. So if you wouldn't mind spending 30 seconds and leaving us an honest review on iTunes or Stitcher or whatever platform you're using, that would be super sweet. If you want to get on Adam or Kevin's calendar, go to tgwipodcast.com/contact. We want to help you invest safely, wisely, and ultimately get you out of the rat race. Thanks again.